Hi, good evening, everyone. In this webinar, we will learn when and how to file tax return in India for non-resident individuals. So we are live on Facebook also, and any those who have joined who has any query, you can drop your queries on the chat box. We will solve your queries after the webinar is over. So before we understand the taxation part, it is very important for us to know the residential status. The residential status of an individual is an important factor to determine the income tax liability in India. So if a person satisfies any of the two conditions mentioned below, then he or she is a resident individual. Else he or she will be classified as a non-resident individual. So what are the conditions wherein if the conditions are satisfied, then the person will be called as a resident individuals? These are mentioned below. When the stay in India for a year is 182 days or more. So if an individual stays in India for 182 days or more, or when the stay in India for the immediately four preceding financial year is 365 days or more, and 60 days or more in the relevant financial year. That is, for over here, the relevant financial year means the financial year for which we are calculating the residential status. Residential status is always calculated on a financial year basis. So these are the two conditions. If both the conditions, if any of these conditions are satisfied, then the person is a resident individual, and if these conditions are not satisfied, then he or she is a non-resident individual. So there are few exceptions to the condition of the residential status. These are mentioned below. We can go through this. In case of an individual who is a citizen of India who leaves India in any financial year for the purpose of employment outside India, then then the first condition that we mentioned of 182 days or more would be only applicable. So the condition of 60 days or more, the second condition wherein it is mentioned that the number of stay in India for the immediately four preceding financial year is 365 days or more, and 60 days or more in the relevant financial year. This condition would be applicable for any individual who is a citizen of India and who leaves India for in any financial year for the purpose of employment outside India. The next exception is in case of an Indian citizen or a person of Indian origin outside India and coming to India on a visit, whose Indian income is less than rupees 50 lakhs, 15 lakhs, sorry, then the only condition, then only the condition of 182 days or more would be applicable. Then only the condition of 182 days or more would be applicable. The next condition is in case of an exception is in case of an Indian citizen or a person of Indian origin outside India coming to India on visit, whose Indian income is more than 15 lakhs, then the number of days is reduced to 120 days. This exception is as per the recent amendment by the Income Tax Department. They have reduced the number of days of stay in India to 120 days for the Indian citizen or a person of Indian origin whose Indian income is more than 15 lakhs. Over here, the Indian income basically means the income which accrues in India. So this is the part with respect to the residential status. So before the taxation part, the residential status is very important to understand. So now we come to the taxability of income for resident individual. the global income of resident is taxable. However, for non-resident individual, that is for NRIs, the taxability of income depends upon the following points. The first point is income received or deemed to be received in India, income which accrues or arises or is deemed to accrue or arise in India. Third point which we must note is income which is earned outside India is not taxable in India. So in the next slide, we will take this point, that is income received or deemed to be received in India, and income which accrues or arises or is deemed to accrue or arise in India on the basis of heads of income. We will understand this point on the basis of heads of income. So over here, it is mentioned the taxability of income as per the different heads of income. Income from salary. Income from salary will be considered to arise in India if your services are rendered in India. Suppose if the employer is an Indian government and the citizen, and you are a citizen of country, even if the income is accrued by providing outside the country, the income will be taxable in India as the income is accruing from India. Since you are providing services, since you are employed by the Indian government. So in case of NRIs, income from house property, suppose you are having a house property situated in India and you are earning rental income. So for those non-resident individuals, this income will be taxable in India and you have to pay tax on that income. Income from other sources. Interest income from fixed deposit and saving account held in Indian bank account is taxable in India. So most of the individuals have fixed deposits and they earn interest on their fixed deposits and saving banks account. The NRIs can have NRE account and NRO account as well. We must note that all the interest which is earned by NRIs on NRO account, they are fully taxable. Interest earned on NRE account is tax free. You don't have to pay any tax on NRE account. NRIs do not have to pay tax on NRE interest earned on NRE account. In case of income from capital gain, income from transfer of capital asset situated in India and gains on investment made in India in shares and securities shall also be taxable in India. So suppose a non-resident individual is trading in Indian stock market and he is gaining profits from shares and securities held in India, or he transfers any capital asset and gains some capital gain. So that amount will be deemed to be accrued in India and he has to pay taxes on that income. So that income will be taxable in India for that non-resident individual. The third income is income from business or profession. So many individuals are self-employed and they have some business set up in India. If the income from business is controlled or set up, the business is controlled or set up in India, then the individual has to pay in taxes in India as that income will be accrued in India. So these are the taxability of income as per the different heads of income for non-resident individuals. So we come to the deductions and chapter 6A for non-resident individuals. So as per the Income Tax Act, NRIs are allowed to claim certain deductions. So there are the list of deductions that are allowed are mentioned below. So under the chapter 6A, NRIs can claim deduction under section 80C up to rupees 1.5 lakh as per the limit. So the deduction under section 80C has many criteria, as in means there are many investments made are eligible for deduction under section 80C. However, for non-resident individuals, the investments which are mentioned here qualify as deduction under section 80C. They are life insurance premium payment, tuition fees paid for children up to a maximum of 2 children, housing loan principal payment, investment in ULIP and ELSS funds, investment in public provident fund, and term deposits. Where the here in term deposit basically means the fixed deposits which are made for more than 5 years. They are eligible for deductions under section 80C for non-resident individuals. Deduction under section 80D with respect to the Mediclaim premium paid for self, spouse, and family. They are allowed as deduction for non-resident individuals. NRI can also claim deduction under section 80E for interest paid on education loan. And deduction under section 80G gives deduction under section 80G wherein NRIs make donation to certain social cause or certain eligible deductions are made under section 80G, then they will be allowed as deduction and you can claim the benefit of that donation made as deduction under section 80G. Deduction under section 80TTA. This is basically the interest which you earn on saving banks account is allowed as deduction up to rupees 10,000. Over here, saving banks account wherein means the NRO account, and if you have any account that is still not being converted into NRO and is still lying as saving bank account, you can get the benefit of that deduction, but it is restricted only up to rupees 10,000. It cannot claim if you are having interest of 15,000 rupees. Suppose you are an NRI is having an interest of 15,000 rupees. The deduction can be claimed only up to rupees 10,000. So these are the deductions which are eligible under section chapter 6A for non-resident individuals. Now we go to our next slide. So NRIs are required to file income tax return in India if the gross total income exceeds rupees 2.5 lakh. So over here, I would like to keep a point that basically most of the NRIs generally have some queries that I am a senior citizen. Can I claim exemption of up to 3 lakh rupees, or my parent is a super senior citizen and he is also an NRI? Can he or she claim the deduction limit of basic exemption limit of 5 lakh? So this is to clarify that the basic exemption limit of 2.5 lakh is only applicable to all non-resident individuals. The exemption limit of 3 lakhs and 5 lakhs of senior citizen and super senior citizen respectively is not available for non-resident individuals. It is applicable only for resident individual. So the next point is the due date of filing of the return for non-resident individual. There is no separate due date, as the due date is similar to those of all the residents. The due date of filing the income tax return is generally 31st July of the assessment year. That is, till before the pandemic, the due date for financial year 1920 was 31st July 2020. However, due to the current pandemic situation, the government has extended the due date for financial year 1920 to 30th November 2020. So the non-resident individuals can file their return for financial year 1920 till 30th November 2020. The next point, those non-resident individuals who have still not filed the return for financial year 1890. Earlier, the last due date was 31st March 2020, but the due date has extended till 31st July 2020. So you can still file the return till 31st July 2020 for the financial year 1819 return, which is not filed yet. And so this is basically the these are basically some points which you should keep a note when when and how to file tax in India for non-resident individual. So if you have any query, you can drop us a mail at info@taxmantra.com and you can drop your query on the chat box. We can help you out with your we can help you out with the solution to your query. And